You served in Treasury, you served in the White House. What's the risk of contagion to a broader financial situation?
I think what's striking is less that Silicon Valley Bank found itself in trouble as it had borrowed short and lent long, and then its deposit base started to crumble, first because of difficulties in the venture capital industry and startup world, and then because people became alarmed about its situation. That, in many ways, is less striking than the fact that you saw substantial moves, even in the country's largest banks, in their stock prices. I think there may well be an element of overreaction in that, but I think it's important to recognize that when banks have long-term securities, even if the banks don't plan to sell them, that when interest rates go up, they have lost asset value, and deposits, which are shorter term, have not lost asset value, and therefore the banks, in a sense, are in a worse position than they were before. So I think, in general, bank accounting probably doesn't fully capture some of the risks associated with this pattern of borrowing short and lending long. And I think there are going to be issues here for regulators to look at. But look, what is absolutely imperative is that however this gets resolved, depositors be paid back and paid back in full. And I don't see anything in any aspect of this situation that would be a basis for that being called into question. And as long as that's true, I don't think there'll be risk to bank asset values and the like, but I don't see, if this is handled reasonably, and I have every reason to think it will be, that this will be a source of systemic risk.